have the slides. Okay. So chapter 12, basically, again, so we'll apply what we have already learned to an example in accounting. Okay. Takes a long time to load. Specifically, we'll talk about revenue cycle, right? Or what sometimes you call sales cycle. So we'll take a revenue cycle, and revenue cycle is basically not just one cycle of many, right? So there are many cycles, right? So the revenue, so there is expenditure, payroll, and so on and so on. So we'll take this cycle, which is very, very common for especially retailer business and for wholesalers. Okay, and we will see what should be kind of a generic approach here. How would you approach this? Okay. So first, again, whenever you think about some cycle, right? Well, you have to imagine it as some sub-process in a big system, right? So remember, we started this generalized general system model, right? So the idea is, well, you have some system. System has boundary, right? Boundary is what defines what system does. You have inputs to the system and you have outputs from the system, right? So when we talk about this revenue cycle, right, which is basically sales, collections, and returns and allowances. Again, so we think what it is, and I just said those are sales, collections, returns, and allowances, right? So this is a boundary. This is what subsystem does. Okay, it deals with those sales, collections, returns, and allowances. Then what are the inputs here? Okay, what are the informational inputs and informational outputs? Well, inputs are sales orders, right? You create sales orders, you enter them in the system. Inputs are collections, so you collect payment for your inventory, which you have sold, right? And finally, you input information about returns of your products. So what are the outputs? Well, you generate sales invoices, you generate documents like shipping documents, and finally receipts. And they can be, you know, many things else, but this is kind of the most kind of important inputs and outputs. Okay. So you have the cycle, these sales cycles, and one of the question is, what information would you like to know, say, as a manager regarding your sales or revenue cycle? What do you think? What information is relevant for you? What kind of questions would you ask, right? If you're a manager, right? So you have a company in place and you have this revenue cycle, this revenue AIS. What reports would you like to have? What questions would you like to get answers to? I'm sorry? Yeah, something like sales report, right? What is a sales report essentially?
Like what item is generating what, like expenses?
Right, so how many items did we sell? How many money did we generate from this sales from our sales activities, right? So what item sells the best? What salesperson, you know, attract the most customers and some things like that, right? So there are many things which you can ask and which are important to the cycle, right? And again, if you take into account returns and allowances, so you want to ask, well, what is the amount of our returns and allowances? What product is returned mostly, right? And so on, most frequently, and so on and so on. So there are a lot of things that you would ask, and you would like to have an information system which would be able to answer all these questions, okay? So if you think about design of a system, right, you should always think, well, what is the system, and what do I want from the system? Okay, good. So now every one of you has a paper sheet which describes this example for revenue cycle, right? So I want you to take 5 minutes and go through this example, okay? Just read it, okay?
Revenue one?
Yeah, revenue one. Not expenditure, but revenue. Okay, you have two. You have both expenditure and you have revenue. So I'd like you to take a look at this revenue cycle. you don't have a... Please read this case. Okay, so I hope you read it, at least quickly browse through it. So this case is, this narrative is something which you would usually find, and I think most of you know, this kind of business process already, right? So you have studied all these courses, you're taking all these courses, so you should know the process fairly well by now. Okay, so you have a kind of typical revenue cycle, right? So you have the inventory, right? And you sell things to people, okay? You sell them. You collect money, and well, sometimes have returns and allowances, right? So again, so in the next few slides, I just put some major points from the narrative. So now I'll skip them, and we can concentrate on more important things. Yeah. So first thing is, what do you think? What significant business events are here? So what significant business events do we have here? A sale. Okay. So, well, sale may encompass a lot of things, right?
The initial sales order comes.
Okay, yeah. So sales order, okay. Sales orders, okay. Good. What else? So someone places a sales order. What else? Then what? Yeah, that's the same thing. Then what? So placement of sales order is probably the first significant event here, right? Well, what should be the second one? Well, okay, you got the order. What do you do with the order? I'm sorry? You record it. Yeah, but this is in your DFD, right? So now we're talking about this kind of, what creates information. We talk about business processes. I'm sorry?
There's a shipping document.
Yes, so you have to ship it, right? So someone created an order, okay, so well, let's assume you approve the order and you ship the order. Then what?
Then you wait for payment.
Then you should, yeah, you should collect payment, right? Okay, and what else is there? Which I have already mentioned.
Returns.
Yeah, they may be returns and allowances, right? Plus, you know, I think the first paragraph tells you, well, basically, now what can happen, that you will have salesperson which would contact customers, okay? So they have this kind of relationships. So in total, you'll have this kind of five significant business events. So the first one, well, you know, I think it's great for illustration and great to show you, you know, this is a great example to show you what value computerized information systems bring to accounting, right? So you can capture like non-economic events, okay, like contacting existing and potential customers, right? Okay, so taking sales order, shipping, collections, and well, returns and allowances, right? Good. So what are resources here? What are significant, well, resources here? What do you think? We may start with agents, or we start with resources. But I think it's better to think in terms of resources. Inventory, right? So one is inventory. So so you sell something, right? So you have your resource is what you are selling, okay? So what do you get back? Cash. Okay, great. And another thing that they mention is feedback from customers, right? And so please take a note here. There's a return merchandise, which for actually a very valid reason, so which is kept separate from inventory, right? So you don't want to mix those. So you kind of have two types of inventory. One is a regular, which you sell. The other one is what you get from returns. Okay. So 4 resources, right? Could be 2. But let's go with 4. Okay. So who are the agents here? Employee. Okay. And what types? Well, there are several types of employees. But what type of employees do we have? Who did we mention? Salesperson. Cashier. Cashier usually, those people who write checks, right? I'm sorry? Warehouse clerk. Right. Who else? Customers. Yes, and shippers. So shippers are those external entities who ship, right? Like FedEx, UPS, USPS, right? Actually, yeah, they do have cashiers. So we have external and internal agents. External are customers and shippers, right? Internal salesperson, warehouse clerks, cashiers, and internal clerks, right? So cashiers are those who basically process collections. Okay. Salesperson is those people who sell. Warehouse clerks are those who prepare the shipment. Returns clerks are those employees who handle returns, possibly allowances. Okay. So then basically, okay, so you have resources, you have agents. Well, then you think, well, how are those related? And here you have relationships, but let's just go directly to this ER. Okay. So this is ER that you have in the book. And what I really want to do with those 2 chapters, right? Today, you don't really need me to kind of read through those chapters. So I will kind of briefly go through some things, but I would like to concentrate more on other things and go slightly beyond the book, okay? And I would like really to talk about ER diagram and basically to talk about relationships, which is not really discussed much in the book. Okay, so here basically is ER diagram, and again, let's quickly take a look. So we have these 5 significant events which we identified, okay? So first is contact customers. So you have salesperson which contact customers, and this results in feedback. Okay, then we have sales orders. So we have customers place sales orders for inventory, right? Makes sense. Then those orders are shipped to customers. Okay, you have collections. Okay, you have shipments. Well, you shipped goods, so you want to collect money. Finally, you have returns and allowances, right? So you have return clerks, which process returns and allowances, and this may result in returned merchandise, which, for some reasons, is kept separately from inventory. Okay. Then, yeah, collections. So cashiers process collections and increase cash, and this is more or less it. So, what I would like really to talk about are those business rules. So here you have plenty and plenty of business rules, and they are not kind of apparent. So when you look at this ER diagram, well, think, well, so what, right? But here are a lot of design choices, which really has significant impact on the way you do business. Okay. So, oh, by the way, so today I already asked why we call REA REA, right? Why REA methodology is called REA. So it's called REA because we concentrate on resources, events, and agents. So on the left we have resources, events in the middle, and we have agents on the right. And actually one question would be, why do we have this particular order? This is REA, right? Resources left, events, middle, agents on the right. Why don't we have events, resources, agents, for example? Again, just, what do you think? Why we have this order?
Because resources are needed first before you
Resources first. No. So let me give you a hint. So we could have had AER, agents, events, resources. Yeah.
Connects a resource and agent.
Yes. So typically, agent and resource are not connected. Okay, in 99% of cases. So there are events that connect resources and events. Okay. And again, this was one of the typical mistakes on during your stage 1. Yes.
So why can't it be agents, events, or resources that way?
It can be this way. Yes, I told you. So this is an alternative way to think about it. It could be either REA or AER. AR would work as fine. Would just work as fine. Okay. So, well, there are events where you have agents directly related to resources. For example, you have employees who are custodians of your assets, right? So they assign some specific assets to guard. So in this case, there'll be no event. There'll be no business event. But so be a connection. But in other, mostly events and resources and agents are connected through events. Okay. Good. So let's try, to look at this ER and analyze it. Okay. So for example, let's start with relationships between events and events. So you have collections and you have shipments, right? So let's try to read. So what does this relationship says, right? You have optionality, you have cardinality. So can anyone read this relationship for me? Oideji, can you read this relationship between collections and shipments? Yeah, but yeah. So there's mandatory one and optional one. So how would you read it formally? Well, a shipment may be associated with either one collection or no, right? It's optional one, 0 or 1. Each shipment is associated with either 0 or 1 collection. Let's go the other way. A collection with each collection should be related to exactly one shipment. Okay? So let's think what it means. Well, let's first take a look at shipments, right? And let's think about some mandatory part. So each collection, well, a collection must be associated with a shipment. Okay? So what does it mean? What do you think? And does it make sense or not? Each collection must be associated with a shipment. So the key word here is must. This well, optionality, so it's mandatory, right? So what does it mean? That each collection should be associated with a shipment. Say it again. Yes. So before we get money, we must ship something. Okay? Does it make sense? No? Okay, why not? Anyway, yes. If there are people who would say yes. So if in order to get paid, right? If you want to get money, you should ship something first. Does it make sense or not?
No.
Why not?
Could
That's fine. So no. So what is the problem with prepaid expenses? No, no. You do the service and then you get paid after you. So first you ship, okay, and then you receive a collection. So again, this mandatory thing here, right, says so that we are paid only if we get a shipment, if we ship something. If we don't ship something, we're not paid. Okay, so this is kind of a business rule. And when does it make sense? When does, well, in what cases it doesn't make sense? What do you think? In what cases it does make sense, and in what cases it doesn't make sense? Right, so when would you pay before shipment? In what cases?
Online.
Say it again?
You buy online, like Amazon or something, you pay first.
Yeah, but they will charge you probably, you know, they will finalize transaction once it is shipped. Okay? Consignment costs. Well, not really. No, not really. But actually, Amazon is one example where sometimes you pay money for something that, you know, they will not ship it to you. Okay? So when can this happen? Sometimes you pay money for something that, you know, it's not shipped. And forget about digital goods, okay? Suppose, you know, this is some real thing. But you pay something and, well, you know, they don't do it. They don't create a shipment for you. So when does this happen? Guys, have you, you know, at least once in life pre-ordered something? So if you want to pre-order something, right, so you pay upfront, okay? So, and this kind of rule, this mandatory thing, doesn't allow you to pre-order, okay? So you cannot kind of prepay beforehand, okay? So if we would here have an option, you would be able to prepay something. Okay, this mandatory thing says, well, we get a collection only if we have shipped something, okay? So, so you can have prepaid orders. What about this one thing here? So for each collection, there must be exactly one shipment. Okay, what is one here? Basically, it means that for each collection you cannot have many shipments. Okay, so what does it mean? Okay, so we just discussed this mandatory part of this relationship, right? It's one mandatory. Now let's look at this, you know, cardinality here. Cardinality here is one, not many. Okay, so for each collection, you will have one shipment, no more than one shipment. Okay. So what does this one means here? And how it's important or not? Hmm?
Ship it at the same time and not have.
No, it's not about the same time.
That's a mandatory.
No, I'm talking about, we just discussed mandatory, we just discussed optionality. I'm talking about cardinality, right? You don't have this crow's foot here, right? So, it's mean one, right? So we have mandatory one on the inside. So mandatory means that you can pre-order, since, in order to collect money, you should ship something, okay? Now, I'm telling you that there is also the thing with one, okay? So for each collection, there is one shipment. In other words, you cannot have a collection for many shipments.
So what's the question?
So what kind of business rule is that, and what does this business rule prohibit? Okay, think. Okay, so this is the way you have to think. So again, you cannot have, so you pay for something, right? In other words, okay, guys, again, I think you are looking into details and you're missing the big picture. So when I say, well, for a collection, you cannot have many shipments, it basically means that you cannot pay for many shipments, okay? You can pay only for one shipment. So what does it prohibit? Say it again? No, why not? So suppose I got 4 shipments today. Okay, so, and I, as a customer, I cannot do what?
You can only pay one.
I cannot aggregate them. Okay, I have to pay for each separately. So what if I ordered 1,000 of those? Okay, independently. So I would have to make 1,000 payments. So basically, it prohibits aggregate payments. Okay, so again, probably you don't want this in the business, right? You want to allow customers to pay for many shipments at once, right? Suppose today I ordered a table, tomorrow I ordered a chair, next day I ordered a PC and a monitor, PC, whatever, right? So then when I get all these goods, I would have to pay them one by one, okay? So because of this, I cannot kind of aggregate and make one single payment. Okay? So let's look at the collections, right? So let's look at this side of the relationship. So here's optional one, and let's look at this one thing, okay? So what does this one thing mean here? So for each shipment you what? Might have a collection, okay? But let's look first at one. So for each shipment you, well, suppose, forget about optionality. For each shipment you have one collection. What does it mean? And again, is there a problem here?
You ship something, you get paid for it.
Yes. But for each shipment you have only one collection. You can have many collections. You have to pay in full, right? So again, for some business it doesn't make sense. So if you buy in some luxury item, right? If you buy in, I don't know, a diamond ring, okay, this thing prohibits you to pay you in installments, okay? And again, yeah, not everyone would like it, right? Depends. Well, if you're selling some, small merchandise, probably this is fine. But if you, selling some luxury items, cars, jewelry, right, expensive jewelry, this might be a problem, okay? So look, so this small things, right, many, one, it does play a big role. And what maybe you have experienced, what happens, so people who design this, and people who didn't study AIS, right, or didn't study it well, so they will create poor choices, poor designs. And then sometimes, well, you have a problem, you call customer service and they say, well, we can't do this, system won't allow us. And the reason why system won't allow you to do it is usually exactly because of these rules. because sometimes someone made poor design choices. Okay, so all the things, right, they are very, very important. Okay, so what do you think? So why do we have an option here? So for a shipment, we may or we may not have a collection. So why it's optional? Why it's not mandatory? Does it make sense or not? For a shipment, we may or we may not have a collection.
You may have somebody you can't pay.
Okay, so yeah, so one reason why default, okay? But suppose, you know, everybody pays in full all the time, so, okay? So suppose we have this ideal case, no, you know, everybody pays, we collect all our money. What should be another reason for that? Okay. They can pay later. Yeah, exactly. So look, yeah. So this is actually very important. Again, so you know, when I checked your ER, so I don't think anybody had this correct. But here's the thing. So if you would have mandatory one here, right? It would mean whenever we create a shipment, think like a tables, right? We have a tables, right? We have a create record. So if it would be mandatory one, it would mean if we create a shipment record, we should at the same immediately create a collection record. Okay? However, there's a time lag here. So first you ship an item and then you collect money. Okay? So first you ship an item, okay, and for some time you will have a shipment without a collection. Since this item should, you know, get to customer, then customer maybe would write a check or whatever, right? And then he would pay. So there is a time lag. So it is possible that you have a shipment without a collection. Okay? So exactly for this case, for this kind of sequence here, for this time delay, we have option here. Okay? That's clear? Again, look, so all the things are very important, you know? So if I have no doubt that most of you probably would put here not an option, but would put here, you know, this mandatory requirement, which would be a mistake. You cannot do it. Okay, let's look at sales orders and shipments. You have sales orders and we have shipments. So Matt, can you read this relationship?
Sales orders can be related to one or no shipments.
Well, let's say
Oh, if it's
a sale order, an instance, right, of sale order can be related to
the delivery of either 0 or 1 shipments.
Okay, so a sale order is associated with either 0 or 1 shipment. This is this part, right? What about this part?
Shipments must be related to at least 1 sales order. Well, to 1 sales order.
A shipment must be related to exactly 1 sales order, right? So again, let's think about it. So let's again start here with this let's start with this sales order part, right? With this mandatory one. So what does it mean that we have here mandatory relationship? This is a mandatory thing, right? What does it mean? It's not optional. That for a shipment we must have a sales order. Okay.
Why would you ever make a shipment without a sales order?
Okay, good. So you think this makes perfect sense, right? Guys, let me ask all of you. So this mandatory thing here says that for each shipment you must have a sales order. Okay? So is it always the case?
No.
Okay. No, so you say yes. Now you say no. So what do you think? Why not?
Well, you could ship something like, let's say, if like another store needs inventory or another location needs inventory. Normally.
No. So you ship to customers.
Only customers. So then.
Yes.
Yes, you always have to have a shipment related to the sales order.
Yes.
Because you wouldn't ship something.
Yeah, but forget about inventory. Now we don't talk about inventory at this point, right? So forget about inventory at this point. So No, okay, so the question is, can you ship something if you didn't get an order? No. You don't get an order, but you ship something.
Unless it's something promoting to other companies, like you do them like an advertisement, you send them without order.
Advertisement. Yeah, actually, that's a good example. So one thing would be advertisement, right? So you want to, didn't get an order from a customer, but you would like to, to advertise your products. Okay, good example.
What
But
about exchange?
an exchange, barter. Well, suppose we don't have this. Maybe this is a valid example, but I don't know. Okay, this may be, yeah, I think this may be not an example. But what else? So probably which you should have studied before. So does something like VMI tells you. What is VMI? Vendor managed inventory. Okay, so what is that?
When the vendor manages it.
Exactly, right? So for example, suppose you have a soda drinks, right? You have a Coca-Cola, right? So usually what happens, it's not you that, you at business don't trace, okay, how much supplies Coca-Cola have. So they do it for you, okay? They know population, they know demand, and they manage your inventory, okay? Without sales orders. So this mandatory thing would prohibit this kind of a business, right? So I think Walmart, well, all those big stores do it. Okay, so this thing would prohibit it. Okay, so if you would create ER for Walmart, this would be no good. You would have to put option here. Okay, so next thing is this one. Okay, it means one. So what does this one cardinality means here? That for each shipment, is there what? So we just discussed this mandatory part, right, of this mandatory one. What about the one part? What does one part means here? This one side. No, for each shipment you have one. Well, I think one way to think about it, right? I'm sorry? Yeah, but we're talking about this one. So for each shipment you have either, you must have exactly one sales order. So we just talked about exactly part. Now about the one part. One part, whenever you hear one part, it essentially means you can't have many. So for each shipment you cannot have many sales orders. Okay? Is it good? Is it bad? What do you think? Bad. Why?
Because if there's two shipments going to the same area, you're going to spend more money shipping it twice.
No, I don't think this is maybe you're on the track, but you didn't explain it very well.
So like if I have like a shipment to two stores.
Okay.
Well, I mean, like obviously they're going to be two separate shipments, but there's no reason why they can't be shipped in the same truck.
Okay. Yeah. So I see what you're saying. Yeah. So this is example, but a better example would be.
Yeah, I think I'm getting a little too much.
So yeah, better example would be, say, store like Amazon, right? I think you all have, Suppose you placed one order, okay, in Amazon, and then you place another sales order in, say, 30 minutes, right, or so. Often they would combine what you ordered, okay, into one shipment, okay. So for two sales orders, you would get one shipment, and the company would save money this way, okay. So for shipment, you would have more than one sales order. So you would combine items from different sales order into one shipment. And this is a perfect kind of legitimate business rule. Okay, and again, our ER prohibits it. Okay, so it's too restrictive. So you can't have this. You can't combine different orders into one shipment, even if it does kind of make sense. Okay. So this would be a very costly for say business, right? Like for Amazon. Okay, so now let's look at this side, which is optional one. And let's start with one. So what does one here means on the shipment side? What does this one means here? It's optional one, but let's forget about optional. Let's talk first about one. What does one means here? So how do you read this? Okay, for a sales order, there is one shipment. So there can be no more. Well, there can be many shipments for one sales order. Does it make sense or not?
What if the order is so big?
Okay, so one example. No, well, what if the order is so big? Okay, valid example. What else? Can be here.
What if it's, I forget if this relates, what if it's not in stock?
Yes,
What are the items?
exactly. A great example. What is if not in stock? So you have an order, right? And some items are in stock, other items are not in stock, right? So you place an order with Amazon, and well, suppose you bought a pen and a pencil. So they have pencil in stock, they don't have a pen in stock, okay? So they would wait until they would get pen in stock, and only after that they will ship it to you, okay? They wouldn't split orders into several shipments. So it's a great example. So if something is not in stock, okay, well, and you place an order for it, well, they cannot ship it. They have to wait until they will get everything in stock. Okay? So again, does it really make sense, right? So this is too restrictive. Okay. Good. So let's look at some other things. For example, shipments and returns and allowances. So how do we read this? What is the relationship between shipments and returns and allowances? Umair, how would you read this relationship between shipment and returns and allowances?
For each shipment, you have 0 or maybe
Okay, and the other way?
a lot of allowances you must have.
Okay, good, good. So, so this case, when you have optional menu, right, this is the less restrictive case, right? You can have 0, you can have 1, you can have many things, right? So this is thing which restricts this, the most, right? The least, I'm sorry. So you have shipment, and for each shipment you can have, well, let's talk about optionality. Does it make sense that for a shipment you may have or you may not have a return and allowance? Yeah, makes sense, right? Sometimes you don't want to return items, right? Or by the way, what is the difference between returns and allowances?
Allowances, like they give you some money back, but you can still keep your product, I think.
Allowances are not credit. You give you extended credit.
Allowances is when, for example, you get a defective items. Okay, returns is when you get defective items and, well, you don't like it, you ship them back for a refund, right? Allowances is when you get some defective items, whatever, and you decide to keep them, but they give you discount for that items, okay? So just to remind you. Good. So what about this many? So for each shipment you may have many returns and allowances. Does it make sense? I'm sorry. Yeah, it does, right, in a way. So you can have many items. So, you may find that first item was defective, then in 2 days you may find that another item was defective, so you may want to initiate another return. Okay. What about this part, mandatory one? So for each return and allowances, well, first, mandatory, you must have a shipment. Does it make sense? Sure, you cannot return items which haven't been shipped to you, right? Okay, what about one? Well, let's talk about this. So what about one? So for each return and allowances, for each return or allowance, there should be exactly one shipment. So basically, yeah. So what you're saying, well, for example, I ordered several things, they arrived in several shipments, so I decided to return them all together, right? So you cannot do it here. You cannot return things from different shipments, okay? Yeah, and I think yes, it should be mandatory many would be better. Yes.
Because if you send some part, so you don't have this part anymore, like defective or something, so you cannot do another shipment. One shipment.
No. Wait. No, I think you are. I think you missed it. So shipment. This shipment refers to shipment from a business to a customer. Okay. So this is not a shipment from customer to business. Okay. So it says, well, suppose you received 2 boxes. You placed 2 orders. You received 2 boxes, and in each box there is an item. And you find that each item in a box is defective, and you want to return 2 items from those 2 shipments, from those 2 boxes. So it tells you, well, you should initiate individual return for the first item in the first box, and you should initiate a separate return for the item in the second box. Okay, you cannot kind of create one return for 2 items. So this is what it tells you, right? And wow.
So you can't create 2 returns?
Yes, so if you got 2 shipments, right, you can combine items from 2 shipments and return them all together. You cannot, since this is just one. So for each return, there should be 1 shipment. Okay, 1, not many. It doesn't allow you to have many shipments. Okay. In some cases, maybe it does make sense, right? So they have this return authorization, and well, maybe there are some procedures which, you know, are followed better if you do it separately. So maybe it's more kind of valid than other things which we have discussed. But for customers, right, it would be easier if they, you know, could combine items from different shipments and return them like one return. Okay. Good. Good. So I think we kind of discussed relationships between events. So let's look at relationships between events and resources. So we have, let's say, this one, customers and feedback, right? Contact customers and feedback. So which is what? How would you read it? So for each contact, customer contact, there, what? I'm sorry? There may be 0 or many feedbacks, right? For each kind of contact with customer, you can have 0 or many feedbacks. Does it make sense? Of course, right? So a person, you know, could leave feedback, or a person cannot leave feedback. Maybe a person.
Take the survey at the end of the call.
Right. Yeah. Maybe the person would like to do 2 surveys, not 1, so you'll have many sources of feedback, right? Okay. What about this one? So for each feedback, there should be exactly 1 contact with customer. Does it make sense? Why? Yes. Yes. So for feedback, there must be a customer. So this mandatory means. So why it's 1? Why is it 1? So basically, it doesn't allow 2 customers to, you know, join and write joint feedback, right? So yeah, customers should create individual feedbacks, right? Which kind of makes sense. You don't really expect 10 people to write 1 feedback, right? Maybe sometimes it does make sense, but in most cases probably it doesn't. Okay. So here's an interesting one. What about shipment and inventory? Or say, let's say, sales order and inventory. Okay, doesn't really matter. So what is this relationship between inventory and sales orders? What does it tell you?
Sales orders must be related to
A sales order
inventory.
is related to at least 1, but possibly many inventory items, right? What about inventory? About this side?
Inventory may be related to 1 or 0 or many sales orders.
Inventory item may be related to either 0 or many sales orders, right? So let's start with this one, with this mandatory many, right? So say mandatory. So a sales order must basically have an item from inventory. Does it make sense? Yes, you saw inventory, right? a sales order can have, can have one or many items from inventory. Can include one or many items from inventory. Does it make sense? Yes. So you want to order several things, right? Good. So let's take a look at this one. So it's about many. So inventory item can be, in many sales orders. Does it make sense? Yeah, the same customers can order the same item, right? So an inventory item sometimes, is allowed not to be ordered at all. So can you have an item which was never ordered? So inventory item can be associated with 0 sales orders. In other words, there can be an item which is associated with, with no orders. Doesn't make sense? So I'm talking about this option here, this 0. An inventory item can be associated with 0 sales order, or an inventory item is allowed not to be associated with a sales order. So what do you think about that one? Which so you may have an item which is not popular, okay, and which is not has not been ordered. But forget about, say, popularity. Suppose all your items in high demand. Can there be a situation where you will have an item which was not ordered? It can happen, right? For example, you got a new item in stock, right? And at this point, nobody have ordered it, right? So it's just there, but it's so new, right? It's brand new, and there were no orders since you just got it. Okay, so there can be a possibility when you have an inventory item which is has not been ordered. Okay, so this option makes perfect sense actually. Again, this is something hard. If you write it quickly, if you create this ER diagram quickly, you may put mandatory here, but it should be really an option. Okay, good. So what else? Well, actually, this one is interesting. Collections and cash. Okay. So I want somebody to read this. What is the relationship between collections and cash? For each cash, there'll be one or many collections, and for each collection, there'll be exactly one cash. Okay, so what does it mean? What do you mean, one cash? So one instance of cash. No. Okay, well, let's start with this one, right? So you get cash for okay, so cash is associated with at least one or possibly many collections, right? Does it make sense or not? Makes sense, right? So if you get cash from collections, so this is where you get cash from, right? From collections, actually, okay. So let's forget about mandatory for a moment. Let's talk about this many thing. So you can get cash from many collections, right? Makes sense. And let's forget about this mandatory for a moment. So let's think about this one. So each collection is associated with exactly one instance of cash. So what does it mean? Yeah, but why one cash? Is what, one bill or what? No, it's not transaction. No, look. This is a resource. Transaction is captured in events, right? This is the resource. This is not a transaction. Okay, this is a resource. It's money. No transactions here. Transactions are here. Okay. Yes.
Every collection must be in the form of cash.
No. Okay, guys, look. So whenever we think about this, right? So this is some information systems, right? And well, all of these will have its own table, right? So there's a table for cash. What would be records in this table? Yes?
Like, they can go different forms that will each cash for the business.
Say it again.
Like, say, for example, under that you have credit card, check, or whatever, but ultimately it will be cash for the
No.
business.
So what would be a record here? You have a cash table. What do you think would be a record in a cash table?
Check number.
No, not check number.
Well, each collection would,
So it says each collection is associated with exactly one instance of cash. And I'm asking you, what is an instance of cash? What does it mean by cash here?
receive cash, so it increases the cash. It receives payment for your service by
Yeah, but okay, what would so you create a table, right? Suppose this will be your actually you do have cash. You do have cash in your project, right? You do have cash. Okay. So what would be your table with cash, guys? Actually, you had it for today, right? Didn't you? You had to create tables. So what was the table in cash? What was the attributes? What was the records?
cash account.
Yes, cash accounts, all right? So this is not, dollar or two or bills. These are cash accounts, okay? So each collection is associated with exactly one cash account, okay? So when you work on your stage 3, your table would have records, and each record would correspond to a cash account. Okay, so does it make sense? This one and mandatory thing. Let's start with mandatory. Each collection is associated with exactly one bank account, right? Cash account in the bank. So it must be associated with a bank account. Make sense or not? Makes, of course, right? So you collect cash, right? So you would put it in a cash account. Does it make sense? Exactly one. So one. So each collection is associated with one account. Would make sense from accounting, finance perspective? Probably yes, right? So you wouldn't split your collection into several accounts. Probably you would put everything in one account. Okay. So let's look at the other side. So we already said that, well, it makes sense for a cash to be associated with many collections. So if you have a cash account, well, many collections can contribute to this cash account, right? What about one here? Each cash account is associated with exactly, each cash account must be related to a collection. Does it make sense or not? Well, no, actually here is the problem. Again, so what it means here, so you have an information system, right, in your business, right, and you have a table with cash accounts. And it says that, well, basically each cash account, there should be a collection which would contribute to each cash account. Do you think this is really what happens in business? Let me ask you another question, I think, which would help you. So if you're a retailer, Walmart, for example, do you only get cash from sales? Okay, so what are other activities that companies do, which you learned in the introduction to financial accounting? Companies do what? I'm sorry? Stocks. Yeah, but this is not how you get the cash. Some related. I'm sorry? Yeah, but credit, your accounts receivable would be converted to cash eventually, right? Well, supposedly. So this is not a problem with that. But what each big company should do, right? And all of you have studied it, no doubt about it. Especially if if a company has a lot of cash, what does it do? Invest it, right? And then you get cash from investments. So there are other cash accounts which would be say related to investments, for example, or there are other transfer cash accounts. So there are usually companies have lots and lots of cash accounts, and not all of them are related to collections. Okay, but here is mandatory one thing. Says mandatory part says, well, if you have a cash account, it should be associated with a collection, which usually is not true. Okay, so this is actually a bad business rule. So we like to have an option here, since you can have cash accounts which are associated with, say not sales at all, with different business activities, right? Investments, or you can earn interest, right? You can rent something, for example. You can lease, right? So there are other activities, non-operating activities, what they call them, right? Where you can get cash from. Okay. So returns and allowances and return merchandise. Mandatory many, optional many. So let me quickly go through it, so I don't have a lot of time, right? Okay. So for each return and allowance, you may have return merchandise, and you may have many items. Okay. You may return many items. Does it make sense or not? Why? Why is first optional? Why for each return and allowance you may not have return merchandise?
Because if it's an allowance.
Because if it's an allowance, you don't return things, right? Okay, so if it's an allowance, you may make no returns. Why it is many?
You could return many items.
You can return many items. Yeah, exactly. Great. What about the other way around? So for each return merchandise, you should have a return. Make sense? Yes, but basically, how would you get an items returned if there was no return, right? There should be a return, right? And then many. So you can have item, which, well, again, by item is kind of a class of items, right? For example, a certain model of display, okay, which is associated with many returns, right? Will it make sense? So basically, you can have an item, the same model, which is returned by many customers, right? So you can have many instances of the same product return, right? So that does make sense. Okay. So this one is the same as this one, so we won't discuss it. But what is really left is those relationships between events and agents, and all of them are the same, right? So if you take a look, right, so all of them are mandatory one, optional many. Okay. So let's start with this side. So let's pick one. I don't know. Let's say customers and sales orders, right? Actually, let's pick this one. This would be a better example. Warehouse clerks and shipments. So each warehouse clerk can be associated with either 0 or many shipments. Okay. Does this 0 part make sense? Why? There can be a warehouse clerk which has not initiated any shipment. You may hire a new employee, right? A new clerk, and he had not really time to do it, right? To create a shipment. Good. A warehouse clerk can have many shipments. Make sense? Yes. This is your job, right? It's not just you came and did one shipment. So you expect to do many shipments. Okay. Now let's look at the other way, which is more instant one. So first of all, each shipment is must be associated with one warehouse clerk. Make sense? Yeah. So you have a person who's a specialist, and who, his job is to create shipments, right? So there must be a warehouse clerk to create shipments. You can have your salespeople or customers create the shipments, definitely. Actually, this is a good point. So what kind of business rule is that when you don't have salesperson, say, create a shipment, but you have a warehouse clerk create a shipment? So what kind of rule is that when you have a warehouse clerk create a shipment and, say, not salesperson create a shipment? and all of you know it. What is this business rule when you have a warehouse clerk create a shipment and not a salesperson create a shipment? Segregation of duties, right? Yeah. So you want, people to do one thing, right? You don't want to do related things, since will have opportunities for fraud here. Okay. So there is another very, very important business rule here, right? So each shipment must be associated with exactly one warehouse clerk. What kind of rule is that?
It's like collusion or something.
Related, but how it's called, dear accountants? How is it called? So each shipment must be associated with exactly with one, not many, but with one warehouse clerk. What kind of rule is that? Control for
Separation of duty.
no. For
Fraud.
no. Well, fraud, yeah, but what kind of fraud? Well,
Investment.
fraud. No, it's not really fraud, but so there's something called, for accountability, right? If you have two warehouse clerks related to the same shipment and something goes wrong, it's hard to blame, any of them, right? You have exactly one person responsible for shipment. If shipment fails, well, he's accountable. If you have many people, for this related to the shipment, well, it's hard to hold anyone accountable. Okay? So this is called accountability. So let's make a break for 10 minutes break, and then we'll continue. Okay? So 9:10 we continue. Is it 9 already?
No,
8, right?
Class an hour.
So yeah, I'm sorry, 8:10 we continue, right? So okay, so given this ER diagram, right? So how many tables should we have? 19. Why 19? How did you get 19? How did you get this number?
16.
16. Close. I don't think this is the right answer.
We have 3 of them, we have a many-to-many relationship, so it's going to be...
Let me think. No, not 14. No. No.
12. 12?
No. Not 12. So how many tables should we have? Stage number 2.
In our stage?
10? Nah. We have more entities.
We had, I guess, 16. 16, close to 16. Because we had 17.
No. 15. 15. Yeah, Mark was correct. Okay, so how do you get 15 tables? So we have 4 tables for each. Oh, okay, first of all, so do we have any mandatory one to mandatory one relationship? Yeah, where?
Are you talking about this one?
Yeah, about this. No. So first question is, do we have mandatory one to mandatory one relationship? At least one. No. Okay. So each entity should have its own table, right? So we have 4 resources, right? Guys, just listen. We have 4 resources. We have 5 events. Then we'll have table for customers, table for shippers. Then we'll have a table for employees, right? So we'll merge 4 entities, salespersons, warehouse clerks, cashiers, and return clerks into one table of employees. So we have 4, 5, and another 3, right? Which should give us 12. Okay, so we have 12 tables for each entity. Why not 12? Yeah, but that's not it, right? But then we have, sometimes we have tables for relationships, right? This actually was a question on a quiz. When do we have tables for relationships? When relationship is many to many, right? If a relationship is many to many, then you create a separate table for a relationship. Yes, where the primary key is composite key, and one part of the key is from one side of the relationship, and another primary key is from the other side of the relationship, right? So how many to many relationships do we have here? So we have 1, we have 2, and we have 3, right? So we have 3 more tables. So it's 12 plus 3 gives us 15 tables, right? Yep. So we have 15 tables. Okay, and let's take a look at those tables. So basically, you follow all the rules, right? And you get 15 tables like this, right? 1 for each entity, and 3 for relationships. I'm sorry. What is the question? How do we get to 12? Okay, so please take a look at this first table, employees, right? So as I told you, we merge salespersons, warehouse clerks, cashiers, and return clerks into one table of employees, right? Don't have to create a separate table for each one. We can create a table for employees for all of them, okay? So we have 4 tables for inventory, for resource. We have 5 tables for events, and we have customers, shippers, and employees, and we have another 3 tables for agents, right? So that's 12. And the reason why we have separate tables for each entity is because there are no mandatory one to mandatory one relationships. Okay, so you have those rules, right? And the first rule, if you have a mandatory one to mandatory one relationship, you merge entities into one table, which we don't do here because we don't have mandatory one to mandatory one relationship. Yes.
So shippers are not employees?
Yeah, no, shippers are like UPS, FedEx, right? So those external entities. Okay, shippers are not employees. Yeah, this may be confusing, this fact. So shippers are, carriers, right? Good. So 12 tables for each entity, and then we have 3 many-to-many relationship, right, between inventory and sales orders, inventory and shipments. I'm sorry, return merchandise and returns and allowances. Okay. So for those 3 relationships, because they are many-to-many relationship, we create a separate table just for this relationship, right? Where the primary key is this composite key, right? For example, for inventory and sales order, we would have a separate table for this relationship. The primary key would be inventory item number and sales order number. Big composite key which would consist of 2 attributes, right? So we have 15 tables in total. Questions? This was your stage 2, right? Okay. Now, given this, next part is kind of, well, how we should normalize it, right? Well, we may or we may not normalize them. So if you follow all those rules, most probably you will end up with all tables being in the second normal form. Okay. So all those tables actually here are in the second normal form. I'm sorry. But you see something like a balance for a customer. Okay. So, and the question to you is table for customers in the third normal form or not? Amir, is the table for customers in the third normal form or not? What do you think and why? You think it's not, right? It's why? Well, first of all, what's the definition? So, second normal form and? No what?
Dependency, like it should not depend upon any other.
Should be no transitive dependency. So each non-key attribute, right? Non-key means not attribute which is the primary key. So each non-key attribute should not functionally depend on some other non-key attribute, right? So when we look at the customers, Amir says that basically this is a table not in the third normal form. Why? Well, no. If you assume that names are not unique, then no. You can have two people with the same name, and you can have different addresses for those 2 people, right? So names are not unique, so you cannot assume that. But I pointed out balance. What is the problem with balance? I'm sorry? Yeah, Yomar. Okay, if you have a new customer, they may have a 0 balance, which is fine. Okay, and again, if you recall the definition for the third normal form, it's not just transitive dependencies, but you don't also want to have what kind of fields? You don't want to have
Related? Repeating?
no, not related, not repeating. What else? You don't want to have. Bless you. You don't want to have what kind of fields? Definition of third normal form. Okay, what is the definition? Let's do it again. Guys, what is the definition of the third normal form? Derived field, right. So basically, the table is in the third normal form if A, it is in the second normal form, and B, there are no transitive dependencies or derived fields. Okay. So the problem with customers is that you have a derived field here, which is a balance. Derived means calculated field. Why a balance is a calculated field? Where do we get the balance from? Sales orders, which So so hint here, well, balance is related to sales orders, right? So what is exactly a balance? How would you define a balance for a customer? Balance how much you owe. Okay, good. How much customer owes, right? So can you calculate this or not based on what you have here? So you have all this information about sales orders, shipments, collections, so on, right? So can you calculate the balance for a customer based on this information or not?
What was the question again? Can you?
So the question is whether this balance field, right, here, this edge, is a derived or is a calculated field. So given all this information you know, forget about this balance. Suppose you don't have a balance, right, here. So question, given all of this, can you calculate a balance for a customer? Yes. How can you do it? So basically, you first of all, you sum, okay, everything that, well, customer ordered, all the amounts of his orders, and you subtract what? What he paid for, right? So you will end up having what he has not paid for. This will be his balance, or her balance, okay? So balance is something that you can calculate based on information from collections and sales orders, right? You have amount here, you have amount for collections, so you can, well, basically see the amounts which were not paid by that customer, okay? So balance is a calculated field, and this is why this customers table is not in the third normal form. Then another question would be, different question would be, so is it okay for it to be not in the third normal form? And the answer probably would be yes, you know. So you don't want to recalculate balances for customers all the time. So this is inefficiency, but we can allow this inefficiency, okay, sometimes. It is not in the third normal form, but we will not decompose it into two tables. We will not remove this inefficiency, simply because, you know, if you have many customers and you will calculate balances on the fly, this will kind of can crumple your system, right? It can put too much load on your system. So you don't want to overload your ERP by, you know, calculating balances all the time. So this is something that, well, basically this table is not in the third normal form. So another kind of thing which is new here is that tables shipments, collections, and returns and allowances are also not in the third normal form. And what do you think? What is the reason? And you can see a hint there. So why tables like shipments, collections, and returns and allowances, right? So tables 8, table 11, and 13 is not in the third normal form. Is not. Yeah, but what kind of functional dependency? Can you explain? So can you explain what is the problem here? And you have a hint right here. I mean, you have something which here is in bold, right?
Customer number.
Customer number, yeah. CNO is a customer number, right? Which is a primary key for customers table. I think, right? So, you know, apparently you have a functional dependency, right? So what kind of functional dependency do you have here? What do you think? Okay, let's do it this way. If you know customer number, So do you know the date of the shipment? No. If you know customer number, do you know the order of a shipment? Order number? Okay. If you know customer number, do you know shipper? So you have customer number, and that customer can have many orders, right? So you would know order number, of course, right? There can be several orders associated with customer number, so you don't know the order number. If you know customer number, do you know the shipper number? No. Do you know EID? Which is, what is EID? Employee ID? No, you won't know, right? Actually, you may know EAD, but well, maybe not. Maybe not. Maybe not. So the employee. So I was just looking at this, right, and I saw that, well, for each customer you have a salesperson, right? Exactly one salesperson. But we were looking at a table of shipments, and salesperson are not the people who ship, right? We have warehouse clerks as employee here, so you don't know the employee number. Is it clear? Okay. Okay, so if you know a customer number, do you know shipping weight? No. Do you know charge? How much the charge is for this shipment? No, right? You can have several shipments. Do you know date delivered? Okay, so this way doesn't work. Now you go the other way. Well, of course, if you know the shipment number, you know who's the customer. If you know the date, do you know who is the customer? No. If you have an order number, do you know who is the customer?
Yes.
Yes. Okay. So here is the problem. If you know the order number, you know the customer. And why did it happen? Why do we have customer number here in this table, in shipments table? If we go back here. Yes, because it's many to one. But here is a trick. Look, a shipment is associated with exactly one sales order, right? If you know a shipment, you know sales order. A sales order is associated with exactly one customer. If you know a sales order, you know the customer. So, if you know the shipment, you know the exact sales order, and if you know the sales order, you know the exact customer. Okay. So knowing shipment gives you sales order gives you a customer. Then, so this is kind of like indirect link how you can find out about the customer, right? So if you would like to know, well, who is the customer for the shipment, first you check the sales order, okay, and on this sales order it would say who is the customer. And for each shipment there is only one sales order, right? And for each sales order there is only one customer. So this is how you create this link from shipments to customer. Then you have another link which is direct, right? Shipment and customers here. Okay? So you have this another link which is yet another way how you can find out who is the customer. So because of this, because you can you have both direct and indirect way to find out who is the customer, you have a transitive dependency. Okay? So this is why knowing order number, you know the customer. Okay? The same is here. Look, collections, right? If you know the shipment number, so for each shipment there is one. Okay, so if you know the if you know the shipment number, right? You go here. Each shipment number has unique order number, right? You go to order number, and each order number has a customer assigned to it. So knowing shipment number gives you customer number. Okay? One way to think about it is, look, suppose that this is kind of an arrow, right? So you have an arrow, and this is this pointy side, right, of an arrow. So shipment points to sales orders point to customer, okay? So when you have this, it means some kind of link. It's not sufficient to have this link, but this is a necessary condition to have a link, okay? In other words, so sometimes what may happen, if you have something like this, you may have a link between shipments and customers. And in this case, you do have a link. Then you have another link, again, like an arrow, right? From here to here. Let me write it down. So you have shipments, okay, SH, which points to sales order, okay, kind of like with this arrow. So this is this pointy side, right? Sales order, which points to customers, okay, CU, right? So it means for each shipment you have exactly one sales order number. For each sales order you have exactly one customer, okay? So basically this is kind of indirect link. This is indirect link, okay? This is called the transitive dependency. Plus, you have a direct link from shipments to customers, right? Which is this one. Okay? So you have also a direct link. Okay? Because of this, you have this kind of anomaly. So that if you have a shipment number, well, the customer number depends on the shipment number. Okay? Known shipment number gives a customer number. Okay? But you included this customer number in this table because you have this one-to-many relationship here. Right? So this is why we have this problem in the first place. And if you look at other things, right, so we have shipments, kind of, okay, arrow for shipments to sales orders and to customers. So this is link between shipments and customers. We have arrow from collections to shipments to sales orders and to customers, right? Another indirect link. And we also have direct links from each of those, right? So this is why we have this problem. So those tables, shipments, I'm sorry, and there's another one. Returns and allowances, right? So one arrow from returns and allowances to shipments, another arrow from shipments to sales orders, another arrow from sales orders to customers, okay? This is indirect link from returns and allowances to customers, and here is a direct one, okay? So you have this kind of two indirect and direct links for each of those. And because of this, those customer number here is not necessary. So we don't need to know customer number in a table to infer who was the customer, okay? So this is also called a transitive dependency. And the way to deal with this problem, well, you basically remove this, okay? We don't need this. This is superfluous information. You remove customer number from this table, okay? We can always find this link, indirect link. You remove customer number from this table, and you remove customer number from this table, okay? Yes? Okay, so for each return and allowances, there is exactly one shipment, right? So if you know the shipment, you go to this table, to shipments table. For each shipment, there is exactly one order number, okay? So you go to this table, sales orders, right? For each order number, you know the customer. Okay, this is kind of this link, right? And bless you, right? And again, so if we go here, again, imagine that you have kind of these arrows, right? And this is a pointy side. So there's an arrow one from returns and allowances to shipments, from shipments to sales orders, and then from sales orders to customers. So here is your link. Okay? Plus there is this direct link from shipments to returns and allowances to customers. So this is how we got this. Okay. So if you want to, so this is information is superfluous, so you don't really need it. So if you want to normalize those tables to the third normal form, you just remove these attributes, this customer number attributes from those three tables. Okay, and yeah, so this is normalization process described. Okay, so this was EER, this was tables for EER. The next step is DFDs, right? DFDs. So here is a context diagram. So you have this revenue cycle, right? The sales cycle. What are the inputs based on what we know? So inputs are, well, you have customers, right? They provide feedback. They say what items they want to order. They provide payments, right? Then you have salesperson, which enters contact info into this AIS that enter order details, okay? Warehouse clerks, shipment details, cashier collection details, returns clerk, return details. So these are inputs to the system. What are the outputs? Outputs are customers, order acknowledgement, receipts, credit memos. Why do we have credit memos? No. So you won't issue credit memo for each customer. That's the hint. So what are credit memos and why do we have credit memos? Guys, financial accounting.
Why do we have credit?
Yeah.
So the vendor, the person that you do business with, can continue doing business with you. So it's like you're giving them an account, or so they could pay you later.
No. Guys, so we have a debit and credit memorandums, right?
It's for return items.
This is from yeah, returns and allowances. Actually, I think more for allowances. So this is when you adjust, okay, your sales. So if you have an allowance, you would have to adjust your sale. This is a credit memo, okay, that you would have to issue, right? Remember, this bank reconciliation, all this stuff. So you learned that before. Well, anyway, those are for returns and allowances. Finally, you send shipping notice to shippers, right? Yeah, so this is a context diagram, right? So basically, you have a system. What are the inputs? What are the outputs? Okay. Questions? What are the informational inputs and informational outputs? This will be, a better way to put it, right? So this is a DFD, which deals with just, flow of information. Okay. Good. So let's look at recording DFD. Level 0 recording DFD. So what do we have? We have for each event, right? For each event we have its own process. Again, so you have those guidelines, right? In the book, so you follow guidelines. For each event you create a process. You create tables for each agent, for each resource, and you put agents as external agents in your recording diagram, right? So each process should have a table where you record results of the process, right, of the event. Then some events are connected. For example, well, you record sales order, right? You record this sales order. Then it is used for shipping, and then information about shipping is used for returns and collections. Okay. So one thing again which you didn't do in your stage number 1, and which, well, you didn't know that you should do, right? Which I didn't tell you about, and there was no time for it basically. So we have these tables, right? We have 15 tables, 12 for entities and 3 for those man-to-man relationships. So all those tables should be here, including these tables for man-to-man relationships. Okay, but I didn't require you to have those. So, so this is a DFD diagram, and well, I think it's, once you have ER, once you have tables, it is something which is not that hard to do actually. You have relationships, right? So you look what things are connected. And this is not something very, very hard to do once you have EER. Just follow some steps, so you don't even have to think a lot here. Questions? Good. So this is level 1 DFD for this record sales order, right? So if you want to record a sale, well, first you have to check credit of the customer, check if you have items in inventory, and enter sales order. Finally, generate order acknowledgement. So given what you know, right, what is the problem with this DFD? There is a mistake here. What is the problem? Yes. So there is a sequence of processes. First you check the credit, right? And only then you check items. So those processes should be connected. Okay, there's some sequence what you do. First you check credit, then you check items if they you have them in stock. Then you enter sales order, and well, then you generate order acknowledgement. So those two are connected, right? But the first three are not. So you would like to connect them through tables somehow. Right, so they are not connected. Okay, so let me briefly go over the rest of the slides. So the next step is the actual implementation. So you have EOR, you have DFDs, you have tables, right? Tables are normalized. So you want to implement this in Access, and this is I will show you something today from Access. So basically, for each table, and you have 15 tables, you create a table in Access. So for each table design that you have, you create a table in Access, just like here. There should be 15 tables here, right? You have here resources. Oh, by the way, please note, resources on the left, events in the middle, and agents on the right. But you also have this kind of, tables for many-to-many relationships, right? So put them, somewhere in between. But please, when you do this in Access, just to make my life easier and yours as well, put resources on the left, events in the middle, and agents on the right. Okay? So you can do it like here. You can organize these relationships. I will show you today how you can do it. Yeah. So first you create tables, right, and then you specify those relationships. Okay? So first you create tables, and then you specify relationships based on your ER diagram. Yes. Okay. Guys. Steven. So please pay attention. This will be your stage number 3. Okay. Good. Then we should create forms. How many forms should be there? Chapter number 9. How many forms should we have? Well, the minimum amount of forms. So, guys, I gave you, and I said there are 2 most important slides, which you should know. Okay. And on the second most important slide, it tells you, well, you create tables, you designate primary keys, designate foreign keys, right? Then you create form for each event, okay? Basically for each process in your record in DFD, and you create form for maintenance for each agent and for each resource. Okay, so basically you should create a form for each entity. You should give us 12 forms, I believe, right? For your assignment, I require you to do less, so I will go over assignment, once we finish. So basically, you create forms for each entity. This is an example of form for contacts. Why do you need forms? It's very hard to work with tables directly, right? So forms are easy to deal with, right? So you want to create a contact, so it looks like, like a paper form. So you input information about this contact, salesperson, customer name, and so on and so on. So you'll have a form. And those are feedback, right? One thing here is that this is form with a subform. Okay, this is not a simple form. So you have one main form, right? And you have a smaller form inside this one. Okay, and the reason why I have this form with a subform is because for each contact you can have many feedbacks, right? You have a contact with customer and you can have many feedbacks. So it makes sense sometimes to make a form with a subform. And today I will show you how to create such a form. Okay. Okay. So this is for for contacts. Then you can create a form for sales orders, right? So you will create a form where you will enter information about customer, information about this order date, information about items which are in the sales order, right? So and your salesperson would use these forms to create sales orders, to input them into your system. Okay. So you can create invoices, but let's skip this. Okay, maintenance process. Again, for each resource and agent, you should create a form basically to maintain your resource and agent, right? For example, you have inventory items, right? You should have a form which would allow, this is a simple form, right? There is no subform. Just one simple form, and you can basically enter information about your items. You can edit information about your items. So this is how you do it. You don't, put it in the table directly. You work with forms. So this is something like a user interface, which simplifies life for users. Okay, so here are some examples, and so this is an example of a query. So I will show you how to do queries, but let's look at this example. Suppose you want to have information about orders, order dates, amounts, and shipment date, okay? And you would like to have all this information for sales orders that were made in the first quarter of 2003, right? Second quarter. So it's April 1st to June 30th, and where the shipments, right, were shipped before or on the day of June 30th, okay, 2003. So you can create like this query. What you can do, right, what we did before, you can write a SQL statement. But in Access you have something called query by example, which kind of simplifies your life. So first you put tables which you would use in your query. So you would use two tables, shipments and sales orders, right? So from the sales orders table, you would take order number, date, and amount. From the shipments table, you would take date of shipment. So when you have this query by example in Access, you put two tables which are in relationship, right, which are linked. So you don't have to say that, well, you don't have to link them. Remember, in SQL we linked tables manually. We wrote something like that order number in this table should be equal to order number in this table. You don't have to do it, okay? So when you put tables which are related in Access, it will kind of join link tables automatically, okay? Okay, so you want to display order number, date and amount from sales order table, and date from shipment, okay? Actually, you have an ability to display or not to display, this field. And for this field, for date from the shipments table, it says, well, don't display it. Okay, you don't want this field to be displayed, the date. Yes?
You have to display like all of the fields in the query, or?
No, you can choose. And I will show you that how you can choose. So they have two tables, and there are many fields in those tables. Okay, they chose to display only three: order number, date, and amount from sales orders. But they want to include shipment date as well in the query, because they want to have this criteria that the shipment date should be less equal than June 30th, 2003, okay? So it won't display, it won't output information about the date, but it uses for this kind of criteria, okay? You kind of filter on it. And another criteria is that you want to have sales order for the second quarter of 2003. So you say, well, the sales order date must be between this and this date, right? Between 1st of April and 30th of June 2003. Okay. I will briefly show you how to do it, but actually this is a good reference. So when you'll be working on stage 3, I would recommend you to look at chapters 12 and 13 for a reference, right? So this is kind of like examples what you can do.
How do you
Yes.
know, like which fields to show up like in a
How do you know which fields to show? It's up to you, right? So you create a query, you're a designer. So you may as well show this, right, date of shipment, but for some reason you decided not to. I don't know why. But maybe to make So again, the idea is that you have a question. The question is the problem. The problem is you want to display all orders. Well, you want to display order numbers, date, and amount for those orders which were made in the placed in the second quarter of 2003, and which were shipped before June 30th, 2003. Okay.
That is why you're making the query, right?
Yes, this is a query. This is the one you want to get, and this is how you do it. Okay, you say, well, let's use those two tables. You put them on the top. You say, well, I will use in my query, right? I will use 4 fields. I will show display output. I will output 3 fields: order number, date, and amount. Okay. I want the date to be between those things, and the reason why I put the shipment date here, although I do not display it, I am filtering on the shipment date. I want the shipment date to be, no older than 30th of June 2003. Okay. In a project, you will create your own queries, so you will have to design them and make some meaningful queries. So it's up to you. You'll be designer.
Like the criteria, like whichever criteria you want, right?
Yeah, so it will be up to you what queries you want to display. Yeah, it should be meaningful something. I will go over the stage 3 very soon. It's 9 almost, I know, this clock kills me. Anyway, so here's another example of very important query, which is accounts receivable. So what are accounts receivable at some point in time? So you have this AIS, right? You have information system, and you have all these tables, which we discussed before. How do you calculate accounts receivable? Oops, I'm sorry. Oh, well, not really. So you have this information, right? You have these tables. How do you calculate accounts receivable? So what are accounts receivables? This is what? What is the definition? Yes. So you provided a service or you sold some items and you didn't receive payment for them. Okay. So given this, how would you calculate accounts receivables? Very easy actual calculation. I'm sorry? Yeah, given this table, right? So you have all those fields, you have all those tables. How would you calculate accounts receivables, amount of accounts receivables at this point, given all this information? There's a very easy way to do it. So one way to think about accounts receivables is kind of a debt, right? So somebody owes you something, right? Do we have some field for a debt here? No. Not really. We have a field which we already discussed, which shows a debt, which is what? Balance, which is a balance, right? So for each customer, you have a balance. This is kind of what this customer owes us, right? So if you add up balances of all customers, you would know, the total kind of what they owe us in total. Okay. So accounts receivable is essentially a sum of all customers' balances. At least if we talk about sales. Forget about other activities. If we talk about sales, accounts receivables are sum of customer balances. Make sense? Good. So if you want to, at any point in time, to calculate accounts receivables, you create a query with something called expression, and I'll show you how to do it. So basically, you say, well, let's take a table of customers. Let's create a variable. Okay, let's create or expression, which is a sum of balances, of customer balances. Okay, it will give you this number, which would be the accounts receivables at this point in time. Questions? No, good. So and you can do other queries. So I really don't want to spend much time here. Let's talk quickly briefly about this one. So what you can do, right? We already discussed. So when you create tables, for example, you can have those kind of validation rules for tables, right? You can specify well that if a customer makes a sales order, the amount of sales order should not say exceed his credit limit, right? Or that you don't want negative numbers for amounts, and so on and so on, right? So you can do it. So you can do it easily with, say, Access or any other database software. And here you have some kind of examples of those tests, and I will show you how to do it. Okay? So those are kind of database controls which I will show you today how to do it, and you will have to do it for stage number 3. Okay. And I think what you can do, so suppose you're an auditor and you come to a company and you can create your own queries for the audit purposes. Okay. Well, suppose, for example, that you had this information where you had order number. I'm not sure what item number is. So item is okay. So you have order and item number as kind of primary key. And for each item in order, you have a quantity, how many items of this type were in that order, okay? And you have a price, okay? And the extension is kind of the total, okay? So you have totals. And as an auditor, you would like to check totals. So what you do, you kind of recalculate, okay? So the check field is the recalculation of the totals. So you multiply quantity by price, you get a total, and then you basically check if the company's total, right, business total, is the same as your calculated totals, okay? And you look at the difference, whether the difference is 0 or non-zero. If it's non-zero, well, there's a problem. So there is some problem. So essentially, the point here is, an auditor, you can come to a company, you can use their ERP system to create queries and audit things, right? You can, for example, check if referential integrity or entity integrity works, right? For example, you want to create a new record with the primary key which already exists in your table. If the system allows you to create it, well, you have a problem with entity integrity, right? And so on. So basically, the point is that you can use this AIS of a client for your audit purposes to check whether controls are installed in this system. Finally, the final point in this chapter is, well, we discussed business rules, right? And we said that some business rules, well, really doesn't make sense, right? And suppose you want to change them. For example, here it says that, well, for each shipment, you have one collection. You may or you may not have a collection, but you have no more than one collection, right? Suppose you decided, well, that for each shipment you can have many collections. Let's say you can pay in installments, right? So if you will do this, then your relationship will become many to many. And the point here is you don't have to change much. you'd create a new table for this relationship, because relationship is many to many, and you would populate this table based on your previous tables. So you would copy information from shipments to shipments, from collections to collections, and for this relationship table, you would kind of put a combination of primary keys from both tables. So essentially, if you want to change your rules, change your business rules, it is not very hard. It is not something very hard. Okay. So you create new tables, you copy previous values, and that's it. This is what the book claims, which is not entirely true, but the idea is that this is not as hard as it might have been if you have not been using this database approach for your AIS. Okay, questions? Good.